All right. So now let's get into like the next topic that we talked about, the interaction of debt and currency exchange rates. So how does currency exchange rates impact your loan size, Aaron?
Oh, wow, this one. Um, okay. I think the best example I can give is my personal loan, which I took in Singapore dollar. And then I used that to buy crypto, right? And
Ooh.
then basically, a lot of people would say that I made a mistake, but I would argue otherwise because actually my loan tenor is 6 years. So I don't. Number one, I cannot time the market. All right. Number two, basically my loan is about, I think, 3 or 4% annualized, yeah, for the next 6 years, right? So I think for me, right, my question is twofold. This one is not just interest rate and currency. I borrow in Sing dollar, all right, and then I invested into crypto, right, where the growth is about 50% for the next 6 years versus a loan which is about 3 to 4% per year. I just estimate that the likelihood that this will be a good investment is high, and also largely the reason why I took that loan is because I am not leveraged before I did this. Basically, I don't have debt. I'm actually debt free, and then I did feel that it's important for me to have a little bit of that because I do want it, right? And also to build a future credit like ability, like it's what Steph say, right? You need to have a little bit of a credit history, So that's why I decided to do it because I do have like upcoming like future big purchases which I want to do and I do want to borrow. So it's good to display that I have like a good credit history of repaying my debt lah. So that's why I took it. So and also because the loan was in Sing dollar and the Sing dollar ever since like many other currencies over the last 3 months has devalued against the US dollar quite significantly. I borrowed the Sing dollar I think when it was about 1.32. Now it's about 1.39, 1.3, 1.4, which means that my debt size just from the currency exchange alone has already been devalued by about 6%. Yeah.
Wow.
So just the currency exchange alone, right? I think if I borrow in ringgit, it will be even more lah. So, but I don't think I can borrow in ringgit because I don't have like a bank account in Malaysia. But I mean, this just displays, right? Like if you're able to borrow debt, right, in a currency that is inflating, right, then you can invest it into a hard asset that is in even in US dollar, right? Generally over time what you'll realize is that it tends to be a pretty good arbitrage play lah,
Mm.
generally. But I would say that it all goes back to like just make sure that you don't overcommit and overborrow. My debt size is very super manageable. I don't spend more than in fact my debt outlay in terms of my cash flow, I don't spend more than 5% of my cash flow on debt at all. So basically, you talk about 20-30%. My debt outlay cash flow every month is only 5% of my income only. So I really don't I don't really have a huge like outlay for debt lah.
Right.
Yeah. So when you look at my structure, right, I'm very very conservatively structured. And essentially, I just need a Michael Saylor, which is what I feel is the right decision to make lah. And I'm very comfortable with it. I'm very comfortable holding that debt. I do like that structure, because I know that my time horizon is in 6 years, and then I estimate that the likelihood of success is very high. And I think most of all, I can actually pay off the debt. I actually took on debt which I can pay off. And if I liquidate my assets, I actually can pay off no issue. Yeah.
So, Stephanie, do you have any thoughts around this?
No, actually, yeah, I actually have a question that I wanted to ask as well regarding this. So, well, property and I mean, is there any relation between property and exchange rates, and how is it like? And yeah, how to make use of it?
I would say
Mm.
yes if you're a huge borrower because like what you realize, right, is that for the people who are literally quite who are the people who are a little bit wealthier, right, usually the bankers, right, they will usually ask them if they want to take loan and then post collateral. So usually what happens, right, is that they will usually put collateral for hard assets, and usually things like property lah. So they'll put the property up for collateral and then they'll borrow the money. Right. So then usually when they borrow the money, the way that they can borrow it is either they will give them an option to either borrow in local currency or borrow in foreign currency. So if you borrow in foreign currency, right, and then you use your collateral, which is like denominated in your local currency, right, then there's also an arbitrage that's going on. So for example, if you put up a collateral of like, let's say a Malaysian property, right, but then you borrow in US dollar, that might not be the best way forward lah. If you like borrow if you like put collateral, right, which is like basically in a local one, and then if your local asset tends to be inflationary against the US dollar, it might not be the best way to go about it. So what you usually want is to borrow in the local currency, and then you basically use that to buy harder currency lah. In this case, usually I just show the US dollar, because usually US dollar, usually the currency over time has always shown to demonstrate very good inflation resistance as compared to other currencies. Yeah,
Right.
that's what I would say.
Okay, thanks for sharing that.
So I mean, like in terms of like impact to like the retail investor, I would say that most retail investors will not really see this issue, but I guess the fastest impact you will see is the depreciation of your currency, right? Which is like I've shared the story, right, for Singapore and the Singaporeans who invested money in properties in Malaysia, right? Like there was a period of time when many property developers were marketing their properties of Iskandar, Johor Bahru, right, to Singaporeans, right? And a lot of Singaporeans actually bought property over there in the hopes that basically whatever they have sold like could be executed. And essentially what happened was that even though on paper they might have earned in terms of ringgit, right? But when you actually translate the ringgit to Sing dollar, a lot of Singaporeans actually lost money. And the worst case is that I think a lot of them cannot actually liquidate their purchase of the property. And the worst part is that even if they have a place to stay when they go over there, right, the property development, the area there is basically just not developed. Yeah, so this is a very good example, right, of you buying assets overseas, right? And then basically, even if let's say there is a paper gain in the local currency, right? But if the local currency works against your favor, all right, because the Sing dollar has strengthened against the Malaysian ringgit in the last like 10 years, right? You will start to realize that actually, even though on paper you might have earned ringgit, right? Actually, you lost money compared to if you had just whole Sing dollar. Yeah, so that is something to keep in mind because like I think the movement against the Malaysian ringgit was north of 20 to 30%. So if you had purchased a property in Malaysia, let's say for 1 million ringgit, right? Because the government also did mention that foreigners in Malaysia, especially Singaporean, if you want to buy a property there, minimum purchase price 1 million.
Yep.
In JB, right? So it's like number one, 1 million ringgit is quite a lot of money in Malaysia. I think for foreigner to come in and put in 1 million is really a lot. Then when you compound that with like already above market rate, right? Then you compound that with the fact that the Sing dollar like strengthened against the MYR, then you're talking about a minimum of 1.3 million just for you to break even over 30 years. Over like 5 to 6 years. So that is a pretty tall order, because you still have to include your renovation costs, you still have to include your legal fees, you still have to include your all the hidden costs. Then once you calculate, right, it can be as high as a break-even cost of about 1.4 to 1.5 million ringgit. So even if the property price rise to 1.5, and even if you still manage to liquidate that, right, you calculate all this, right, actually you don't make money at all. So when you like look at it, right, like that's the main reason why not just currency exchange rate, but I would say that foreign ownership property rules is also one of the main reason, right, why I don't own foreign property. Because I think, right, for most people, right, the best place that you can buy property is your passport citizenship. Where you come from, I think that is the best place for you to buy property because essentially, the government there cannot make laws, right? Hopefully cannot make laws to screw their own citizens, which is why personally I never buy foreign real estate in my own portfolio because I have seen, I have witnessed, and I've shown time and time again, right, that if it push comes to shove, right, generally the country will first protect their local residents. They will not protect foreign investors first, usually.
Right.
Yeah, I think that's a very good point.
Yeah, lah. So like as much as they say like maybe Malaysian property is overvalued, I would say that when you buy property, I would say that the first place that you need to buy is the country that you're from lah. Because I think it's quite difficult for you to go wrong if you buy a property in your own country, which yeah, provided that you pay a fair value, as what Steph has mentioned.
Definitely. It's a big purchase, and you really don't want to do it outside of a country that you're unfamiliar with. It makes it 10 times harder in a sense.
Yeah,
Yeah.
like even
Yeah.
if your own country very tough already, you go to another country, you don't even like speak
Speak the language.
You don't speak their language, you cannot control anything. Then you go over there like some blur brother like that. I tell you, a bit tough lah. Like there's no real control. It's not like equity where you can exit anytime in the liquid market. Like if you're not happy, you can just exit because there's protocols to do it. Property, considering that's really immovable, right? Like you would want to be in a place, right, where you have some sort of influence and voting power lah. So that's why I always say if you want to buy real estate, it's better to start from home country first before you even think about going overseas.
All right.